Hello, I'm Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with the BNZ. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news. The Reserve Bank of Australia is expected to hold its official cash rate later today at 4.5%. That's after a significant increase in its official cash rate since October, which has cooled the economy down. But in New Zealand, the Reserve Bank is expected to hike its official cash rate from 2.5% either next week, next Thursday, or on July the 29th. That's because our economy is starting to recover, and that was reinforced by strong business confidence figures out yesterday from the National Bank's monthly survey of business confidence. It showed too that pricing pressures were starting to grow. Businesses are looking to increase their prices and capacity utilisation is starting to wither away. That means there are some inflation pressures on the horizon the Reserve Bank needs to look at. Meanwhile, overnight, news that Russia and New Zealand could form a free trade agreement. That would be great for our dairy exporters in particular. We also had news from the New Zealand Institute of Economic Research about the outlook for New Zealand's growth. They expect growth to be around about 2% in the next couple of years. That's significantly below the consensus for growth around about 3% in the next couple of years. News from Europe of a slump in consumer confidence and weak inflation figures. There are real fears now about deflation in Europe and calls for the European Central Bank to print money. This is a real drawback for New Zealand because the Eurozone is our third largest buyer of exports, and if its economy is weak, that will affect us. And news too, the Spanish bond market slumped overnight after Fitch downgraded it to AA+ from AAA. I'm Hickey. That was 90 at 9, brought to you in association with the BNZ.